Manhattan, 2016. Two men climb into an Uber. 5-minute ride. They get out, walk a block, climb into another. They do this for the best part of a month. Every ride, the same question to the driver. How do you buy your insurance? What they heard changed everything. The mid-50s yellow cab drivers were happy to visit a broker on a Tuesday afternoon. The Uber drivers, they lived on their phones. They could not pause a shift to sit in someone's office, and nobody in insurance was building for the way they actually worked. Welcome to Scouting for Growth. I am Sabine VanderLinden, and this is the show where we unpack how the insurance intelligence layer gets built today, one frontier firm at a time. Those two men in the Uber, they were David Daiches and his co-founder Dan, the founders of INSHUR. Nearly 10 years on, INSHUR is the fastest growing insurer for the on-demand economy. Over 1 million policies issued, 25 million Amazon Flex driving hours covered through their wallet technology, partnerships with Uber, Amazon, and DoorDash, and a $35 million recent funding the next frontier, insurance for autonomous fleets. In the next 40 minutes or so, we unpack David's INSHUR blueprint, why he chose fluency over features, the moment he realized claims is the product, and how he's building the autonomous insurance exchange to price risk on the agentic frontier of mobility. This one is rich. Take notes. David, welcome to Scouting for Growth. Hi, David. Thank you so much for joining me today.
Thanks for inviting me.
So let's dive into who is David, what you have done in your life to actually becoming a co-founder and chief operating officer of INSHUR.
Okay. I'm David Daiches. I am, as you said, the co-founder and COO of Insure. We are a digital-first MGA operating in the on-demand economy. We operate in the US, UK, and in the Netherlands as well. I started life as a technologist. I used to code in the retail sector. So I worked for a number of big retailers, started off at Sainsbury's, very good training ground, straight out of university, learned a lot there, worked for a couple of other retailers, and probably about 15 years ago, stumbled into insurance, as I think is a common tale in the industry. So I was living in Brighton. I was working in Birmingham, and I was approached for a job running a software house in Brighton in the insurance industry. And I didn't know anything about insurance, went for a few interviews, wasn't really sure, decided to sort of say, well, this is what it would take to tempt me. And they tempted me, and I took the job. And I realized very quickly that the whole technology setup for the insurance industry was sort of significantly behind retail. And in fact, most of the systems, this was around 2008, most of the systems that we've been used to run the insurance industry were developed pre-internet. So it was very difficult for them to adapt to sort of online and e-commerce and things like that. So I immediately thought, this is a good industry to be in. There's lots of opportunity. And then understanding the scale of the industry, I think the figures at the time, I don't know what they are now, it was a sort of $3 trillion industry worldwide, and it generated 6% of the UK's GDP. So I thought, great. So yeah, that was, say, probably just over 15 years ago. And yeah, it was it's an interesting ride. And then met Dan just over 10 years ago, and we started INSHUR.
That's amazing. And something often in the industry, people say, please stop saying this, but a lot of us fall into insurance and we fall in love with it. So we fall into it and we fall in love with it. I've been in insurance myself for 30 years, started my career at Lloyd's of London and then deciding to serve the industry by taking consulting role. But like you, technology became my passion. Digital transformation became my passion, looking at workflow and processes and how to digitize them. And like you, I realized there's a massive opportunity in this industry. So you already mentioned Dan. You met Dan 10 years ago. And I read this origin story about both of you. You were in Manhattan and you decided to take some Uber rides and start interviewing in some ways the drivers. So can you tell us about this experience and what you discovered?
Yeah. So Dan fell into insurance at a similar time to me. So he was, and Dan's story is very interesting. So he moved to the States from Russia when he was a young boy, and his family drove taxis to make a living. It was the American dream. So that was sort of embedded within his family. He took a different route. He was actually working on Wall Street. And then when the crash came in 2008, his family at that point had a small insurance broker in Manhattan serving the yellow taxi community. And he went to work there. And so we sort of met. I was working for a technology company, so we were talking about doing some projects. And what he was saying was that the demographic of the drivers were changing. When Uber came to town, at the time, there was only 12,000 yellow taxi licenses in New York City. And when Uber came, very quickly, that grew. There was about 150,000 Uber drivers. And the whole insurance process was very long-winded and manual, and people had to drive to a broker's office, climb the stairs, sit in an office, fill out some forms. Then they'd come back a week later and they might have some prices. And then a week later, when they'd signed some paperwork, they'd get some policy documents. So the whole process took 2 weeks. Now with the Uber drivers, that was very frustrating for them because the insurance was the last step in their onboarding process. So they had to get their car, have it inspected, and then they'd be waiting 2 weeks, so they couldn't earn any money. So they were very frustrating, and the demographic was completely different because the average taxi driver was in their 50s. They drove full time. Most of them had been doing it for about 10 years. So they were sort of used to it, and they're quite happy once a year to go into these offices and sort of have a chat with, Fred in accounts and have a cup of tea, coffee, probably in New York. But these new breed of drivers, they were digital natives, but their travel on demand, they got their food on demand, their whole businesses were on their phone, and they didn't want to talk to anyone, let alone go into a broker's office. So it really showed there was a demand for an online journey for them that they could get on the road quicker. And then the problem we solved for them is they got 2 weeks worth of income that they wouldn't have done if they were sitting there waiting for insurance to come through.
It's interesting, right? Because it's already measurable. 2 weeks of income, which is quite significant for any Uber drivers. And so can you share with us, what is the size of this on-demand economy? What is the custodians, the people sitting into that market?
I think the latest figures that we've seen, it's over 10 million people in the US are regularly participating in the on-demand economy. And this number's growing. And actually, we saw some, frightening statistics around, I think it was nearly 40% of teachers and 70% of nurses are using the on-demand economy to supplement their income. So it's not now seen as a luxury for maybe some students putting themselves through college. This is a hugely growing segment of the economy that is supporting sort of real people with real economic needs, and it's helping them put food on the table. So we feel passionate about it being an area of the economy that we want to support and make sure it's supported properly.
It's interesting because you're talking about putting food on the table. I think after COVID and because of COVID, a lot of people have realized they had to build resiliency and have multiple income as a result. Driving a Uber or actually working with Deliveroo has become a actually a big activity across markets to actually supplement, those additional dollars, these additional pounds that people need to actually live a decent life. I've heard you in the past talk about insurtech, right? And you saw a wave of cool tech, probably focusing mostly on marketing rather than delivering real value to the customer and to the industry. So what for you is a problem that you have actually seen needed to be solved when you started with INSHUR?
I think, the initial problem with INSHUR was there was a whole new segment of these drivers who didn't necessarily look at Uber as a career choice. It was something that was, either temporary or to supplement income. And the insurance products that were available just weren't fit for purpose. They were manual, but in terms of they were sort of annual policies that were expensive. And the concept of sort of usage based and just providing people coverage when they needed it was, hadn't been thought through at that point. So we wanted to make sure that people had the cover that they needed, but only for the time that they needed it. And what that did, that wasn't just a problem. It made it uneconomic for drivers because the insurance was typically cost them more than their car. So the payments on the car were usually about the same or slightly less than the insurance. And that created a driver supply problem for the platform. So we were solving two problems at the same time. It was making sure that these drivers had the adequate cover when they needed it, but also that we were maintaining the supply for the platforms and the drivers could earn a decent living.
So you have mentioned a concept, fluency over feature. And I have heard you, use those two terms quite a few times. And I believe the idea behind that, whether we think about Amazon or Uber, they are great partners, right? They're leveraging APIs and apps to actually interact with their customers. But the underlying metric I think you look for is the unit economics. So for you, everything at the end of the day needs to be validated by the business case. So when you think about INSHUR, how you've been able to deliver an amazing product for your customer and make sure it was affordable on one side, address the big protection gap problem at the same time, but also they were able to sell those 5 million policy, I guess, in the first year.
Yeah, I think so. There was a lot of people coming in who had a solution, cool tech, but they didn't have a problem. And I think what we did differently, and I think what gained us a reputation with these platforms, and at the time we were a relatively small company and we're working with Uber, who was one of the most high profile tech companies in the world. And what we found is we needed to it wasn't just about selling insurance, it was about understanding the business model of the platforms and where their bottlenecks were. And so we approached it rather than going in and demoing, we've got great technology. What we wanted to do was demonstrate that we understood what problems they were facing. So it was about driver demand. It was, making sure, certainly in the UK at the time, there was a problem with sort of uninsured drivers. So we would make sure that we guarantee, we would send certificates of insurance to Uber in real time if someone cancelled the policy. We made sure we had a deep understanding of their business flows and where their pain points were and designed our products around that. So rather than just being a bolt-on and we sell a product at the end of a customer onboarding journey, we like to see ourselves embedded within their process flow. And obviously, from their perspective, we help solve that problem. So obviously, the more embedded we are, the longer and more fruitful these relationships are.
Definitely. One stat which I found is 25% of on-demand revenues goes to insurance. And I think it is an extraordinary cost burden, right, to the industry as well. So how did you manage to deliver really those unique digital experiences, and what role wallet technology plays into it? Because, we see the regulation changing. By the end of this year, we have EUDI wallet, everybody will have their ID in their wallet, which provide probably opportunities as well. Yeah. So how do you start dealing with the coverage gap by leveraging this type of technology?
Well, 25%, it's a big number. It surprised us when we heard it. But if you think about a lot of the platforms in the early days were providing blanket coverage. There was lots of discussion with regulators. It's a new way of operating. And in order to get, to establish these platforms and get the growth they needed, they were sort of taking out a lot of insurance themselves. And one of the challenges with that is that every driver is being treated the same, and there are good drivers and bad drivers, and some drivers might be doing 60 hours a week, some might be doing 5. So, how we try and reduce that is by, segmenting drivers, looking at usage and being able to price things on a more individual basis rather than just looking at a blanket. So it's treating each driver as an individual. And also with sort of wallet technology, what we're looking at is people having one sort of on-demand economy wallet and being able to work for different platforms, which most people do. I think around sort of 80% of people who work in the on-demand economy sort of multi-app. So they might be doing sort of Uber and Lyft or DoorDash and Uber Eats. And so being able to provide a product that allows them to have the confidence that they're covered in whichever platform they're working for, and they're only getting charged for the coverage that they need. I think what people, a lot of people in the on-demand economy, certainly in the US, English isn't necessarily the first language. Some of these sort of regulations and insurance requirements can be complicated and they're not quite sure. So we try and make it as simple as possible so they know what they're buying and they're buying the right coverage for the right time.
We have been at ITC London together a couple of times. I had the honor to interview with you as well at the first one, and you gave us an amazing keynote during this year's conference. And you told a story which struck me. You talked about, I believe, David, who finished a shift right after 12 hours of working at 2 a.m. And it was raining. It was a Tuesday, and he hit another vehicle. They help out deploy, and in that silence, he actually thinks, I'm going to put food on the table, I'm going to pay my rent. And you said at the time, and I realized actually part of this conference was about claims as a strategy, so that people are not actually at that point interested in a fancy UI. They want a product which is there at the moment they need it the most, the claim. I thought that was a powerful reframe at the time. And so can you tell us about that story and how that actually led to your own strategy around how you service your drivers and other providers and make that claim experience really special?
Yeah, absolutely. Well, I'll tell a personal story first. So before I was in insurance, I probably typically, like a lot of people, I buy my car insurance on one of the aggregators, and I just look for the cheapest policy. And I did that for many years, and luckily I didn't have any accidents. Then one day my car was parked and somebody drove into it and drove off. So I rang up the insurance company, said, this has happened to my car. And they said, oh, you've got a £500 excess. I said, what does that mean? So that means you have to pay the first £500 yourself. I said, okay. And then they said, we need to get it repaired at our approved body shop. Said they haven't got any availability for 3 weeks. So, okay, well, I've got a courtesy car. Said, yes, it's, I think, the smallest car you could get. So I've got 2 kids. I need to take them to school. So I need a bigger car. Or that will cost you an extra £30 a day. And I realized at that point that the policy I bought was practically useless. That experience stayed with me. And as we moved into insurance, and, I'll be honest, in the early days of InsurTech and Insure, it was about growth and selling policies. And I think us, like a lot of people, we use a TPA, a third-party claims company, because that allowed us to launch the business a lot quicker. But we realized very quickly that provided a poor experience to our end customers. And what was the product that we sell is claims. It's the promise to sort things out when things go wrong. And no matter what kind of fancy UIs you've got and marketing campaigns and slick websites, when, the worst happens to people, we want them to be confident that they are covered. They're going to call us. We're going to be able to talk them through what they need to do and get them back on the road as quickly as possible, in a empathetic way. And that, not only helps that driver, but in the field that we're working, the on-demand economy, the platforms want to get the drivers. They don't want them off the road for 4 or 5 weeks. They want them back on the road as quickly as possible. So at that point, we decided we have to do our own claims. We're not being true to ourselves. And so we set up a claims operation, both in the UK and the US as well. And, we're very proud of what we've built. And we feel so owning that whole life cycle as well. It's good for us because we understand more about the data, which helps with our pricing. And, we're in control of that customer relationship and their level of satisfaction, because when we're working with TPAs, they say, that's how we were measured as an organization. It was on our claims experience. So yeah, to me, the claims is the product that we sell. And at the end of the day, that's the most important thing that we do. Everything else just gets us to that point of servicing claims.
It's interesting, the example you actually shared with us. I mean, all of us, I've probably had, a comparison website based policy. You and I are in insurance, and I always said to my husband, no way, right? These are vanilla products. And so therefore, if you want the best coverage, you need to go to the right insurer. Mm-hmm. And so often you realize there's so much education that needs to be done in that area, because people get dissatisfied, right, when they get through their claim. And probably in your case, it probably ended up $1,000 out of pocket, right, because you had to pay your deductible and then pay for the bigger car to just take care of your children. So there's an education at discovery, I think, but also using claims as a differentiator is fascinating to me. Now, as you know, we talk a lot about artificial intelligence now. And to deliver a great claim, you have to make sure you have the human in the loop, to drive that empathy. But hopefully, with AI, you can also take some cost out from the process. Are there any good example you can share with us to help our listeners understand what is the opportunity that exists actually within the claims process?
I think claims it's a very interesting area that lots of people talk about automation in claims. But I think the one thing that people need to remember is when someone's making a claim, it can be a very stressful or emotional time, and there always needs to be a human available. So we think about claims automation as how can we empower the humans to do more efficient work. So one of the things we've done is certainly some motor claims can take several months to resolve. There's different adjusters work on that. So one of the things we do is we have sort of AI summaries of every claims file. So that used to be a big pain point that someone would ring up, and frustration for the customer saying, look, can you give me an update on what's happening? And the adjuster would say, okay, just let me open your file. Right, there's quite a lot. Let me read through this. And that could take, 10, 15 minutes. But what we can do now is get a very quick summary using AI. So they've got all the salient information. They know what the most recent touch point is, what's happening from our perspective, what we need from the customer's perspective. So it's about making the process more efficient without losing the human touch. And in terms of trying to fast track claims that are, smallish claims, physical damage claims, there's lots there we can do to get those processed quicker. Because that's also a point of frustration that, if it's just a dent in the door, people want to get it fixed as quickly as possible. And we don't want to be sort of going backwards and forth and debating things. So trying to make early assessments based on sort of good assessment of what the damage is. But I think there are lots of use cases in claims. We're looking at more. So, what's this space? But it's certainly an area that typically has the selling process tends to be quite high customer satisfaction, but the claims process certainly has work to do. So that's certainly an area that we're focusing on.
So during your keynote titled InsurTech Scale-Up Blueprint, what worked, what didn't, what's next? We talked about what worked right now. So let's go into the uncomfortable truth of, what did not. So what were the toughest operational trade-offs you had to make, David?
There's a lot. I always describe working at Insure is like 10 MBAs from the world's best schools. You learn so much. And if you think about the last 10 years and the way the world's changed, there's been lots of huge events, world events, so I'll pick a few. I think having a great co-founder always helps. I think Dan and we work extremely well together, and we complement each other. We've got different skill sets, but together, we're a formidable force. But I think, we've scaled too quickly. Certainly we hired, after sort of post-COVID, we did a funding round and we hired very quickly. And then sort of the market changed. We just thought this whole low interest rates carry on forever. So hiring too quickly without enough rigor. I think the hardest thing to do as a founder is to let go a little bit. When you're involved in everything, and you've probably got the deepest knowledge out of anyone else in the company, empowering people and delegating things. I think we restricted ourselves a little bit because we wanted to be involved in anything, and that slowed us down. So I think hiring the right people and then empowering them to do a great job and just sort of setting them off and feeling out that we've got a great team. I think being complacent as well. I think we fell into that trap with some partnerships where we thought, this is great, it's going to last forever. And, then you focus on the next one and then suddenly that partnership's not there anymore. And I think I mentioned it earlier when we were talking about getting a deep understanding of the business model of the platform. You have to be realistic. Partnerships are about mutual benefits and symbiotic relationships. As soon as you're not beneficial to the partner you're working with, then there's not going to be any business there. So you need to make sure that you remain relevant. It's like any relationship. You need to work on it, put effort into it for it to grow. And, to quote from Stephen Covey, seek first to understand and then be understood. So listen to what people are telling you, dig deep and understand that rather than saying, we've got this, we want to do this.
It's very well said, David. And I'm going to repeat some of the key statements you have made so far. First, it's about understanding the problem. Mm-hmm. When you work with your partners, you don't show the demo. You go and really dive deeply into that problem. Probably implement the 5 whys, right? Then what you actually also highlighted is that you have to build the business with the right co-founder. So bravo, Dan. But also the right people, the right team. And, in the current market where talent in some ways is a little bit scarce in our industry, but also you have so much change happening, the choice is harder than ever, I think, to find that right balance. And then when I actually talk to organization, is always about people, process, and technology. You mentioned the process part, really understanding the journey, where the pain points are within that partner journey and demonstrate how you can actually solve them. Mm-hmm. And then the technology come afterwards. When you think about it, it's an enabler. Still today, even though we may be talking about AI strategy, it's first about business. We have had the pleasure of sharing ITC, as I said, a couple of times. The first time we met, we talked about on the road to net zero. So sustainability is also a big part of Insure strategy. And one of the fascinating data points from that conversation was around EV insurance, right? Autonomous driving, higher severity risk, lower frequency. And so I'd like to dive into that severity gap. How is this narrowing? Is it narrowing? What does the data say? Can you tell us a little bit more as to how we start pricing this type of risk in our industry?
Yeah, it's interesting. I think, in fact, I read something yesterday around sort of the number of EVs that get written off as a proportion, percentage of regular vehicles because if there's any sort of damage to the battery. Quite often, the cost of that makes a repair prohibitive. So I think there's a lot of pressure on the OEMs to think about the battery technology. I heard someone talk about whether they can make them more modular so you can just replace a segment rather than the whole thing. And then I think, in terms of sort of the engineers and the people and the repair shops, it's getting better, but, as the percentage of EVs increase, but, you need specialist knowledge to do an inspection on an EV and understand, what the damage is, and whether it's economical to repair. And I think that's what's driving the severity. So I think that there is a discussion between the people saying the insurance is too expensive, but I think there's a discussion with the OEMs about how they can think about sort of the repairability of some of the, certainly the battery being the main component, but some of the sensors. I think a front bumper for a Tesla is about $3,000 or something, and they have to be replaced if there's any damage there. Yeah, I think it's going to get better, but certainly it's dropping, and so there's far less frequency in terms of the incidents. But AV is interesting. That takes it to a whole different level, and it sort of rips up the insurance rule book. We're not insuring a human, and they're working out what decision they made at what point, and was that the right or the wrong decision. Now you're having to insure an ecosystem of vehicles, software, sensors, connectivity, fleet owners, robotaxi platforms. So it's going to be sort of very interesting coming into this sort of transition into AVs. We've seen them in London at the moment.
Yes. I haven't taken my first Waymo yet in London, but I did in LA. And I really enjoyed the experience. I called my husband whilst doing this, and he said, I don't think you should have called me while taking a Waymo. But it's fascinating to see them today in London as well.
It is. And, it's going to be an interesting time, the transition and how long that transition takes. I think, one of the hardest problems to solve is, what does insurance look like in the hybrid situation where there are autonomous vehicles and human-driven vehicles, and then you've got ADAS-assisted vehicles in between? It's going to, there's going to be some interesting cases. You could have an autonomous vehicle that can stop very, very quickly, and a human driver with perfect reactions, paying perfect attention, going to the back of them, and then it's, who's liable at that point. So there's a lot of work to do there. We think there's an opportunity there as well, because lots of people are developing their own systems, their own standards. And I think there's an opportunity for some kind of autonomous vehicle sort of liability profiling to sit in the middle of all this and look at these vehicles, because it's going to be interesting how the regulator responds. Thankfully, I don't think there's been any serious incidents in the UK yet, but I think we saw it in the US.
We have, indeed.
Everyone was very bullish, and then there's an incident, and then everyone just pulls back a little bit. So it's about creating a sort of insurance ecosystem for AVs and the transition that I think satisfy the regulators, but also you reassure the public that this is safe and well regulated.
It's fascinating to see how this ecosystem is evolving, and you use the term because it's not just about insurance. It's about the manufacturer, the technologist, the driver, so many involved into that value chain. And the example you actually used, and I experienced that myself when I was in the Waymo in LA, they sometimes stop really abruptly. I mean, in that case, there were 2 or 3 cars spaced behind, so there was no accident. But I was wondering, if a Waymo stopped like this so abruptly, maybe because a person is crossing, a pedestrian is crossing the road, what, system should we develop to make sure that the right parties are, judged in the right way?
We're looking at how we could develop some kind of claims arbitration service. So the interesting, there's so much data, and a lot of these cars are sort of connected, and this data can be looked at real time. And certainly at the point of an accident, we believe that if you can get the sensor data, we can get sort of telematics data, LiDAR data, we can get sort of connectivity data. There's some urban data in terms of what's happening, in terms of traffic, weather conditions, and that kind of thing, and pull all those together, and then use that data to actually determine where we think, to reconstruct the incident and look at where the liability may lie. Because there's lots of things people don't think about. A lot of the Waymos that they're managed by fleet operators who at the end of the day, the Waymos all go back to a parking lot and someone cleans them, make sure the tires are inflated, and they'll potentially be responsible for software updates. So there is some liability that could lie with the fleet owners. Obviously, everything is dependent on connectivity, and there's fail safes there, but if connectivity is compromised, there's cybersecurity threats. There could be faults in the sensors that may be supplied by a different manufacturer. So it's a complex ecosystem, and a lot of claims today, a lot of money is spent in sort of litigation, and we think that there's an opportunity for some kind of arbitration service which removes a lot of this costly legal expense, which in some cases can equate to sort of 40% of the cost of claims. And then we think that this is an opportunity for to work with regulators to look at safety information, because if all this data is coming into a central point that's sort of neutral, because I think part of the problem today is the OEMs are a bit wary of the insurers, and we've seen people like Tesla set up their own insurance vehicles, and I think insurers are a bit wary of sort of the OEMs and software providers in terms of how open they're being about some of the information that they're sharing. So I think there is a real opportunity for someone to sit there independently and work with the regulators and the safety. There could be some interesting data about certain scenarios that, if you look at it as a whole, we can feedback to make it, make the whole AV industry a bit safer, which, it absolutely is. I think that's at least 10 times safer than a human driver. But I think for public perception, and I think there's sort of a generational thing, my kids will go, whatever, it'd be cool to go in a car. But I know people of my parents' generation who are like, absolutely no way. So I think we have to court the public, to get them to fully embrace this. But it's, one thing, it's going to be extremely interesting and exciting to see how this develops.
I agree so much, David. So I read that INSHUR just crossed 1 million policies, actually.
Yeah.
And you've raised $35 million in July last year to accelerate R&D, to accelerate growth, and also to expand into new markets. So it would be great to hear a bit more about where you project to expand and how you actually balance the pressure between growth and scaling a very successful business, actually.
Thank you. Yes, the scaling. So I think we've learned a lot over the 10 years we've been in operation. So we have a very, very much more disciplined approach. Now, I think in the early days of InsurTech, I think if everyone will say, so interest rates very low, so money was easy to come by, and most people, the word loss ratio was never mentioned. And it was just about scaling as quickly as possible, gaining market share, and then everything changed. And suddenly it was, right, you need to make an underwriting profit, and capacity was much harder to get hold of. I think we were lucky from the early days. We invested in sort of insurance expertise and underwriting and actuarial expertise. So I can remember having disagreements with our actuarial team in the early days and said, look, we could sell much, much more. I said, well, no, but the loss ratio will deteriorate. I said, well, that's, we didn't have a sliding scale at that point. So we sort of, it wasn't that much of a concern at the point, but we did maintain that discipline, which has served us well going into the last few years. So we have great relationships with our capacity providers. We have our own claim team that's been a big catalyst in being able to deliver consistently good underwriting results, but also looking at how we can scale with new partnerships, innovative pricing models, sort of value adds for the customer as well. In terms of the investment, so we're looking at, we've got a new product that we've launched recently. We've taken our wallet technology that we first launched in the UK with Amazon. So that for Amazon Flex drivers, so these drivers who use their own vehicles, working on a sort of part-time basis. And this was one of our most successful products to date that allowed these drivers who would have to buy a full-time courier policy, and it just didn't make the economics work. These were drivers who were maybe doing 20 hours a month, and we developed a pay by hour product in conjunction with Amazon that they could get for about £1 an hour. They could get insurance, which made it a lot more viable for a much bigger group of drivers. That really helped Amazon, again, the supply for peak times, Prime Day, etc. So we've invested with taking that global. So we've just launched that with DoorDash in the US. We're doing a pilot within a couple of states of them at the moment. And the plan is to roll that sort of wallet technology out. Our goal is to have as many platforms on that as possible and make it really easy for drivers to just have one wallet, which they pay, that we get a feed from the partners on a daily basis. So they get charged for the insurance that they need when they need it. And then when they drop below a certain balance on the wallet, it tops up with, £25, $25. So it's cost effective. They can manage their cash easily. And, we are able to encourage a much wider group of people into this on-demand economy because it's, economically it makes more sense. And then also, as everyone, we're investing a lot in AI. I've had to say, even probably since we sort of last met, since ITC in January, the developments in the AI world have been astounding in terms of what's possible. So I think that's an area where we're putting a lot of focus on as a team and looking how we can really leverage that for the future. And one of the things I'll share, I started as a coder. I'm now building my own stuff again on Claude. I'm absolutely loving it.
Same here, actually.
and I think it's important. I think if you want to be...
And I'm not a coder. I am a business person, but it's just so intuitive that I'm impressing myself around the things I can do.
Well, it's same here. And I was seeing AI demos a few months ago. And I'm thinking, what's really under the hood here? It's very shiny demos, but I wasn't convinced that these were things that we couldn't do ourselves. So, well, how am I going to find out? So I threw myself into the deep end, and it's been fascinating. And from my perspective, we're going to be an AI-led company. I don't want to be talking from the position having read a load of reports. I want to be talking from the position I do this every day and at the weekend, and I've built these apps that we're using in the business now. And I think there's an excitement within the whole company, and Dan's exactly the same. My mind is slightly blown. I've got some reputation now in the company of being, Dave's in love with Claude. And I think there's a balance between not getting carried away with hype. But I am truly, truly excited given the rate of how things are changing and how things are improving. In a year, 18 months time, not just insurance, but I think the world's going to be in a completely different place. I think some people are afraid of it. I'm absolutely super excited.
I'm always a bit worried about the Luddite who actually have made a choice not to try and at least play with the technology. Mm-hmm. I think it's so important to understand what is happening to us and be part of the change rather than being consumed or disrupted by it. Like you, I am also in love with Claude beside my husband. And I have to say that I've been impressed by some of the things one can do. Mm-hmm. You are INSHUR, you are looking at it from on demand and providing better service and apps for your customers. I'm doing the same from, an investment, commercialization, venture clienting point of view and building apps to actually make it easier for some of the founders I work with and investors I work with to actually create a little bit more of an audit actually for the founders to understand what works commercially with their proposition and potentially what work less by actually building skills and capability using the platform. So I've been also pretty much impressed by it. One thing which come to mind though is what does sustainable, profitable insurtech growth feel like inside INSHUR? Just giving a bit of tips for those out there, trying to build a scale up, a growth business.
Number one, you need a great team. So I would say, invest in your hiring. So we've got a great talent team that do a great job. We brought that in-house a few years ago, and I'll give them a shout. We rank very highly for candidate experience and onboarding, and we put a lot of effort into. And it's a two-way thing. If it's it's not the wrong person, it's the wrong match. So it could be the wrong company. So we like to showcase and explain who we are, what our values are, and also what and match with the candidate. So I think it's getting a great team, having very clear objectives. So everybody understands what we're doing and where we're trying to get to, what's important. I think it's understanding the regulatory framework that we work within. Working with the regulator is very important, making sure that we're working closely with them, because I think we hadn't always done that in the early days. And it's, as a scale up, understanding your responsibilities, understanding your customer base. And, it's not a product that you deliver once and it's there in perpetuity. Everything changes very, very quickly. So I would say good team, clear objectives, listen to the customers and your partners, constantly have those conversations. Don't take anything for granted. And, on the complacency side, I say, expect the unexpected. Dan and I were talking just the other day. I said, everything seems to be going okay at the moment. Says, Dan, we know there's something just around the corner. And I think that's one of the things, that's one of our strengths. We nearly died during COVID. We were 100% of our business was around transporting people in the back of Ubers and taxis. And that stopped. We didn't panic. I had to pivot and said, well, actually, people are moving around. Well, there's lots of Amazon parcels being delivered and lots of pizzas. So that's
a lot of parcels and food as well.
So I think having a team that, I always talk about, if you were marooned on a desert island, who would you want around? And I look at people in the company. These are the people, because their approach to problem solving and practicalities and not panicking. And that's the kind of team you want around you, because there's always something around the corner. Something will change. And it's about solving problems and in a practical way. And I think that's one of our strengths. And I think people, our investors and our partners look at that, and that gives them confidence that, we might not be able to predict the future. Nobody can, certainly not in, what we've seen, in terms of AI the last 6 months. Someone asked me for about a sort of 3-year plan. I said, I'm going to struggle to give a 12-month, because, prediction on where things will be, because things change so quickly. And then I guess the final advice, and I give this to everyone, I'd say our internal mantra is make yourself easy to do business with. Consider it from the other person's perspective. How can you make it as easy as possible for them? And I think being a really good partner, and I think that's what helped us well with some of these, big platforms. And so, sometimes in the early days, I remember when we signed our first partnership agreement with Uber, Dan and I sort of looked at each other. How did we do that? We were probably only 30 people at the time. We're a tiny little startup, and this is a huge, great tech company breaking all sorts of boundaries. And so it made us easy to do business with. They gave us some challenging projects to do, and said, whatever we do, we have to make sure we deliver. And for every partner, for every project, we've delivered today. And I think that's what's given us this reputation in the marketplace.
Congratulations with the reputation. And I would like also to add, when we think about AI, there are things which are absolutely uncertain. And because the velocity of changes is so great, it is difficult to predict 6 months or beyond 6 months in the future. But what you actually highlighted one key skill set, which is going to be really highly relevant. I was reading recently some statistics around the human agent ratio, right? Mm-hmm. Each one of us will be surrounded by agents, and we are going to become agent bosses. Yeah. You probably read the McKinsey piece of research where they have 40,000 people and 25,000 agents. When you read this, you think, oh my God, but actually it's 1 individual to 0.6 ratio agents. In the future will be, each one of us will probably have 10, hundreds of agents. Mm-hmm. I built so many skills. I probably already have 20 agents supporting me every day. So we need to actually look at things differently. However, what is going to remain is 4 out of 10 skills we have today is going to change. But I think some of those who are going to stay is problem solving, creativity, and I think our ability to think strategically and empathy. Yeah. In our industry. So probably there's 4 skills that will probably remain out of the 4, which are going to disappear.
Mm-hmm. I think, a human connection is always going to be there. So I think in things like, claims, partnerships and things, there's always going to be a need for that. And you're right with the creativity and sort of the critical thinking. Anyone can write a prompt and get something back, but it's actually, thinking about what do you really want to achieve. And one of the big things, certainly in insurance, I think everywhere, is there's a big change management exercise here, because there's a lot of people aren't from a technical background, and I've seen it internally around people just being a little bit cautious and afraid. And one of the things I love doing, I'll spend time with people just going around and just giving them that first nudge and seeing their faces a day later when they go, oh, this is brilliant. Oh yeah, I didn't know what to do. I'll say, look, if you get stuck, say, Claude, I'm stuck, what do I do? And it will help you. And I think helping people who might be on a different learning trajectory, and also, let's be open about it. There's people who are probably thinking, well, am I going to get replaced by an agent? And I don't know if you saw the InsurTech Insights Simon Torrance's session. I thought that was fascinating. And I think it was Frank saying about how someone has licensed they cloned themselves
Absolutely.
and licensed that back to the company. So there's all sorts of interesting things.
Harvard professors, I heard a few of a clone of themselves with their knowledge, and they love it. So we are testing that as to how can I have a Harvard professor in my team, for example, and then hopefully we'll be able to license some of those avatars.
Yeah.
But that is a reality which may happen.
It's super exciting. There will be challenges. I think, sort of adoption and, as a whole economy, not just insurance, but how, they talk about universal basic income and things like that in sort of 10 years' time. And what do people do? What's the most important human skill in the year sort of 2036? It's all interesting questions.
There is actually a good piece of research, some from the World Economic Forum, around the future of work. And if you go through the report, they actually made some analysis around some of the jobs which are going to become more prevalent within the next 5 to 10 years, and their assumptions for sure, and the one which are actually going to disappear. And I think it's worthwhile having a look at that study, because it just gives you a feel as to where the demands might be. And you're right around the universal salary, right? It might be something we may need. We are seeing right now that a lot of companies are not recruiting for internships. We are seeing, because you have to be this Asian boss from day one, that, interns which used to enter data and read reports are not needed anymore. So we have to rethink. And when I go to my business school and when I coach young people, I said, you're not going to an internship to be told what to do. When you apply to an internship, you have to say how you are going to use AI and how you are going to help the business move faster.
Yeah, speaking to some young people recently, and they've got lots of AI skills and they're trying to get a job at a sort of an AI company. And I'm saying that's the wrong approach.
Yeah.
There's some, I think we're in a bit of an echo chamber because we're talking tech all the time.
Yeah.
And there's a whole, I saw statistics recently that said that 80% of people in the world don't know what AI is and have never used it. And I would encourage young people to get the AI skill, self-teach, but then look for a job in any company. And in fact, the less technical they are, maybe, manufacturing, sort of food and beverage, retail, where there isn't that big natural uptake, because, in any company where there's processes, there's opportunities, and you don't want necessarily to be one with the least AI skills in a very AI automated company. You can be the, someone going into a more traditional company and just spotting all these opportunities. And that's where you'll learn, and that's where you'll add real value. So don't look for the sort of the marquee brands to go and work for. Go and work for your a local factory and implement what you've learned. Because I think it's all very well talking about in theory. That's why you and I are both building our own thing. So I want to understand how this works and what you can do with it and what you can't do with it and what's coming in the future. If you're not building things that are sort of relevant and improving your business, I don't think you get that true experience. But if you can apply it and you can say, wow, I did that, and that's made that process 5 times faster, it's making that company a whole lot more efficient. It's worth getting that experience, even if it isn't in a sort of super trendy AI startup.
Yeah. Top tip from Dave, right? make sure to not consider just tech companies. I think it's important. I want to repeat that. Regulated industry, finance, banking, insurance, have a lot of processes, and there are a lot of opportunities to transform and actually come with this AI skill. Manufacturing as well. So I think those are top tips to consider as well. Here's a question I've been asking a lot of emerging tech platforms as Amazon and Uber scale. For instance, do you see them moving towards self-insurance or captive structures in the future?
The truth is they do a lot of self-insurance themselves at the moment anyway. And what I think one of the challenges they face, but as public companies, is investors don't understand insurance. They don't understand why there's so much cash on the balance sheet. So I think from the conversations we've had, I think a lot of people looking to diversify that away and not self-insure as much. So yeah, I think we're there today. And I think we talk about sort of the diversification of that insurance ecosystem. And certainly I think it was done out of necessity in the early days. I think we're probably moving away from that, I would say. I think it's still there. They've still all got their captives. But I think they'll look to diversify that and, again, try and take some of that risk capital off the balance sheet.
So trying to actually apply much more hybrid type approach and actually leverage the different techniques we have in the market to protect themselves better, leverage their money better, I guess scale and grow further better. So another things which come to mind is, could you maybe share with us 3 pieces of advice, for anyone in mobility? I know we talk a lot about insurance, but at the end of the day, we talked about on-demand and mobility as well. And you mentioned when we met fluency over features, partnership is a new distribution and respecting the claims process, right? So you have been 10 years with INSHUR. So what could be some of the advice you can give others out there?
I would say you can't do it all on your own. Partnerships are key. Work out where you sit and, the connections you have with the people around you and form strong partnerships. And as I said, partnerships are around on each side understanding the other side's problems and opportunities and working close together. So, I think the days of people trying to do it all are gone. So strong partnerships, understand the customer. We've seen the on-demand economy grow from next to nothing 10 years ago to now it's growing to 30-40% year on year. Say there's over 10 million people in the US are actively participating in the on-demand economy on a weekly basis. It's been used to, supplement incomes. So that's changing. Understanding people's needs, how they use it, the fact that now multi-apping is people are using multiple platforms. But one of the I'm going to give a shout out to another company, but I've listened to a great podcast from the RAMP, I think it's a chief product officer, talking about the voice of the customer agent that they built. It's in Slack, so you can ingest all of their customer feedback and calls and reviews. And uses that so anybody in the company can say, we're thinking about developing this feature. How's that going to go down with customers? And I think that's something that AI can help really well with, is synthesizing all that data so you get a very coherent and up-to-date view on what customers want and what their needs are. Because I think it's very easy to forget about where this is going and how, when it's 2 a.m. and Dave's just crashed his car and he doesn't, that he knows exactly what he needs to do. He's got a phone number and he knows that he's going to be looked after. Yeah. So always maintain that connection with the customer. And I think the new one for me for 2026, it's self-learning.
Yes.
You have to invest in yourself more than ever. I can't remember where I read it, but if you're not sort of spending 8 hours a week self-learning and learning about AI, by the end of the year, you're going to be left behind.
It's a good metric, 8 hours. I mean, probably you and I spend a bit more every single day, but I think at least 8 hours is a good benchmark per week, by the way, per week, right?
And it's easy. There's so much material out there. And we talk in INSHUR about teaching people to fish. Don't give them the fish. So don't build them an agent. Say, look, this is how you could build your own, have a go. And And I think it's just encouraging people, and people, shouldn't be scared, and just dip your toe in the water. There's plenty of good podcasts, or even on the Claude. The Anthropic website's got a great 101 training course that takes about an hour. It gives you all the basics. But people have to invest in themselves, and I think that, or else you risk getting left behind.
Yeah. So I did a training actually last year in August. I follow Ali K. Miller, 1 million follower on LinkedIn. And so she actually put together a great AI training. And now she's doing a lot of work around how we build agents. Mm-hmm. So for business, AI for business is a trademark. So I spent probably 2 days going through all the training and started really getting it. I thought I was already very good, actually, David. I thought I knew my stuff. And then I did a training. I said, actually, I learned a few things. So I sent her a little thank you. I said, actually, I learned a few new things. Mm-hmm. And I've scheduled some of my tasks, and I've actually started programming a few things, building more GPTs and all those things. So she gave actually for a business user a different lens on it. But a question for our listeners, listeners, if you want to reach to David or I talk a lot about what is a frontier firm, David. A frontier firm is a company that literally deliver intelligence on tap. Intelligence is utility within the business. And they actually have human and agent collaborating with one another. Mm-hmm. And lastly, every one of us are becoming agent boss. So my question is INSHUR frontier firm? What that means as well is having the right governance and ethics internally. Yeah. Having the right ecosystems of partners, integrating AI within the way the organization works, and also within the culture of the organization, applying some of the great principles of change management, having a leadership which believe in it, and build an environment where adaptability and flexibility is there on a daily basis. So I'm asking our listeners, and so you can reach out to David L.I. if you want to tell us whether you think INSHUR is a frontier firm. What do you think, David?
I'd like to think so, but I'll let others be the judge of that.
So, David, thank you so much for joining me today. If people want to reach out, maybe propose a new partnership, maybe apply for a role at INSHUR, what should they do?
Feel free to connect with me on LinkedIn, David Daiches. I think there's not many of us around.
Yes.
Quite easy to find. Or you look on insuregroup.com. All our vacancies are posted on there. That's probably the best two routes. Or I frequent many insurtech conferences. So if you see me, feel free to tap me on the shoulder and do it the old-fashioned human way.
Perfect. Thank you very much, David, for joining me. Maybe we'll see each other at ITC New York earlier in June. What a conversation and what a blueprint. Here's what I'm taking away. The best insurtech founders aren't selling insurance. They are moving friction from someone else's business model. That is fluency. That is why INSHUR won Uber and Amazon. And it is a discipline most of the industry still hasn't learned. And on autonomous vehicles, David is right. This is the hardest problem insurance has ever faced. Sensor or software, human or machine, the frontier firm that cracks that pricing puzzle is going to underwrite the next decade of mobility. My money is on the team building the autonomous insurance exchange. 3 quick things before we go. 1, subscribe to Scouting for Growth wherever you are listening. More frontier firm operators lined up, and you don't want to miss them. 2, rate and review the show. 30 seconds of your day, a meaningful lift for hours, and it helps more corporations, investors, insurers, financial services institutions, and founders find the conversation. 3, go find David Daiches on LinkedIn. Visit insure.com and keep watching the autonomous insurance exchange unfold. That is where mobility risk is going next. I'm Sabine VanderLinden. Keep scouting, keep building. See you on the next show.